Welcome to the October 14th, 2024 Advanced Report from McGowanGroup clients and NetWorthRadio.com listeners. Also, shout out to all the Longhorn fans. This week, the big event, or one of the top financial stories, Dow Jones Industrial Average hits an all-time new high, 42,800 at the final trading day of the week. But I have some reasons for that and some insights to what it means to the future. All right, this is Consumer Price Index. I found a more colorful graph that breaks out the sources of inflation and core services are the primary driver here. But trailing 12 months comes in at 2.44% for consumer inflation. But what really set the Dow up was the news of producer inflation. Now that's inflation for companies, right? And it includes wage push inflation, which was the big deal in the 1970s. Well, what happened there? Inflation for September, zero, none for producers, and for the trailing 12 months, 1.8%, less than the 2.4. What happens to that difference? That's called profit margins for companies. All right, we track this every week. That's why you want to subscribe. This is the S&P 500 companies for the current quarter reporting so far. So we've only got 30 companies out of 500. Major banks just started to report, but it's a great indicator. It came in last week at 18%. Wow. Now it's 7.3% over last year. Well, that's good news, but there's better news on this side. These are the forward projections for the third quarter right here. That's supposed to be a growth rate that's about 7%. Then it accelerates to above 10% and 16% for the third quarter of 2025. Part of that is producer inflation really has subsided to below the Fed's target, and we're going to cover the Fed at the end here. All right. Oil stocks. Now this is curious. We've reported on this before. This is 10 years of the inventories at Cushing. And I had a question, what do the national inventories look like? Well, it turns out there's 42 million barrels nationally in storage. All right, that's not counting the Strategic Petroleum Reserve. That's a whole nother subject. But anyway, 42 million barrels. Well, Cushing is 25 million. Now, what does that tell us about the future price of oil? It tells you something important. You can go back to the shale revolution. You go from 20 million barrels at Cushing to 69 million barrels because the U.S. shocked the world by the shale revolution oversupply. Wow. Then you go here and you can see this low point is about 20 million barrels. Well, this summer, oil hit 85, right? We've had inventory drawdowns almost every week from over 35 million barrels down to below 25 million barrels, which is pretty close to the historic low in storage. So I wanted to see the national, but remember, oil prices went from 85 to 65, but you had a huge drawdown. So you're not like oversupplied is what I'm trying to say. And at the same time, you've got discussions in the media and even Israel has said the oil infrastructure of Iran is fair game. That exports 2 million barrels a day. It would put the world in a deficit. The companies right now are at about 7 times cash flow. Now that's plenty of profit at the $75 a barrel level and even slightly below 70. But this says we're low on inventory historically. What about nationally? Well, since Cushing is 25 million, that's a majority. That's like 2/3 of the storage there, almost 2/3, but 42 million barrels. Where did it peak? There's the shale revolution, peaked at 52 million barrels. And you could see during the pandemic, about 54 million barrels. Now, well, 42 million barrels. What is that? That's near, in other words, we're not oversupplied, we're not overstocked. Well, that says energy infrastructure. we believe is a great part of the portfolio because it's 7 times cash flow. That's a double-digit forward growth because they're buying back stock, they've got a nice dividend, and it's a great hedge against the geopolitical situation in the Middle East. As a matter of fact, there's one projection. We're about to get to interest rates. Oh, by the way, I'm Spencer McGowan, your financial weatherman and president, McGowan Group Wealth Management, the team of 11, the team that cares. We serve affluent families right here from the Crescent in Dallas. You can meet the team at themcgowangroup.com. All right, interest rate forecast. Oh, oil predictions. If Iran carries through with its threat to shut down the Strait of Hormuz, then you would have, according to Clearview Energy, you would have a $28 spike in the price of oil. Now, the Fed cut. How did we predict back in March that the 3 years would be rate cuts all the way from 5 1/3% down to about 2.5%? Because that's what the Fed put in their own projections. And at McGowan Group Wealth Management, we actually read stuff like that on a weekly basis. That's why you want to subscribe and send the link to your kids so they'll be smarter and you won't have to send them more money. All right. How did we know that the Fed was going to cut by 50 basis points? Because Treasury, 90-day Treasuries follow the Fed funds overnight bank lending rate. The Fed also has a thesis that if you want inflation under control, you've got to have the overnight bank lending rate right at wherever inflation is. Well, inflation's 2.5, right? Their most recent cut here is forecast by the T-bills before they did it because the Fed is leaky. These guys play golf, they talk a lot, they're all suits, and they share that information. What do we know about November 7th based on this? This tells you, this is the 10-year Treasury right here, that the 10-year Treasury is actually saying 4% by the time you get out to 10 years is a pretty good rate even with duration risk. But with the T-bills going to 4.5, they're telling you the Fed is likely to cut again November 7th, and that makes perfect sense because it's right after the election. Then, if you look at the 6-month Treasury, it looks like another 1/4% or 0.5% in the subsequent meetings. Thank you for tuning in. Go to themcgowangroup.com or networthradio.com for the longer broadcasts. We're glad to have you as a subscriber. Thank you for tuning in today to Net Worth Media. We also have Apple Podcast. Simply type in Net Worth Radio and boom, it'll hit your phone right then. If you also go to networthradio.com on a browser, you're going to be able to meet the team. You can see our performance track record, the model portfolios that go with today's broadcast. Also at networthradio.com, the longer play podcast is available there as well. We're grateful that you've tuned in. Remember, when we talk about a security, it doesn't make it a recommendation for your portfolio until we actually complete a written plan for you by Zoom or in office or simply a conference call. So you reach us at networthradio.com if you want to get that arranged. Market fluctuations and how to handle them. We build high cash flow portfolios, and past performance doesn't guarantee future results, so you do have to be ready for challenging markets. We can build more cash flow during challenging markets than we can when everybody's happy and everything's up, which is when we tend to raise tactical safety. Those allocation strategies are here at networthradio.com. Thank you for tuning in.